Did you ever feel the struggle of trying to balance your everyday bills, yet still trying to also invest? Well, I've been there, and in this video today, I'm sharing with you the power of investing with small amounts of money. In fact, there's 3 simple steps that you can start today to have a powerhouse portfolio and get started with, yes, a very small amount of money. A study by Harvard University scholars found that when people make specific, actionable plans for investing, it actually makes it much easier for people to stick with those plans. By requiring less financial strain and commitment, an investment portfolio can start small and snowball up to decent wealth in the background. So the question is, how do we take best advantage of this idea? Well, it leads us to step number 1, and that is understanding the growth mechanism. Let's say it's your 18th birthday, and you decide you're gonna start investing, let's say $5 a day. Now, at the average return of the stock market, you would have $1,694,000 by the time that you retire. But see, there's a lot more to the story. See, the growth mechanism is really the compounding growth that helps this happen. During that course of time, you only put in $85,000, and that's the course of your working life. But the compound interest grew by $1,607,000. See, the growth mechanism really works well, even if you start off with a small amount of money. And I mean, think about it, just $5 a day, turning into 1.6 million. Now, what this means is as your investment grows, compound interest gives you investment growth not only on your hard-earned $5 a day that you're investing, but on all of the previous growth that you got along the way. You got to think of it like a snowball. It starts going down the hill and it starts small, but as it keeps rolling down that hill, which is ultimately putting your $5 a day into the stock market, it continues to collect additional snow, which is the compound interest. But come here a minute. I can bet that you're likely well over the age of 18 right now. So does that mean that there's no way to this $1.6 million? No, not at all. And I'll explain it a little bit later in this video if you are in your 20s, 30s, or 40s. But this can't happen unless you understand step number 2, which is the psychology of small investments. So take a moment and tally up all of your expenses that you make every month. Now, if I would ask you to invest $1,000 a month, think about that. How difficult would that be to invest $1,000 a month? But what if we say, hey, could you invest $10 a month or $15 a week? See, these numbers probably sound much more doable, and therefore the psychology behind it helps you stay consistent with your investments. And I kind of look at it a lot like working out. Think about how many people you know, they start a workout program. And the idea is they're going to go as hard as possible. They're fired up. They have a lot of motivation. It's the beginning of the year. Quite frankly, I fall for this all the time. You see this intense workout program. After a while, maybe 2 weeks pass by, you start skipping the workouts and you fall off track. That intensity, that big thing becomes so much more difficult to stick with. But what if we would say instead of that, all you need to do to start losing weight is to walk 10 minutes a day? See, just like working out, same thing with your investments. You start small, and over time, you start seeing results out of that small consistency. And then from there, you can scale up and invest more or work out more as your finances and your time allows. But then there is step number 3, using the right platform. My favorite program is right here on the phone. It's the Webull investment app. You can get many of the different investment accounts with this app, and they do not charge you trade commissions. And that's wonderful, especially when you're investing $5 a day. You don't want to be hit with a bunch of trade commissions. But before you click the link in the description below and get Webull, we need to review a very critical piece, and that is the type of account that you need to get started. And quite frankly, if you've watched my other videos, this is something that I failed to clarify in my $5 a day update. I am sorry. The best account to start with is not a taxable account. You actually want to start with a Roth IRA. Now, if you're not familiar with that, the reason for that account is because when you invest and that growth on the investment happens, that growth is tax-free. So even when you withdraw it in retirement, years from now, tax-free. Now, I'll be honest with you though, my $5 a day challenge is not in a Roth IRA because I already max that out every year. So this is something a little bit different. But if you don't already have that, if you're not taking advantage of a Roth IRA, that's actually the best account to get started with. And I totally recommend it. I'll include a link in the description below to a video I did on the 5 surprising facts of a Roth IRA that you can watch after this video. But this leads us to step number 4, and this is the turnkey plan. This is your turn to make the magic happen. So we've already seen you can make a ton of wealth off of a small amount of money invested. No longer do you need to stress out and worry about how we can make $200,000 a year and save up like $10,000 to invest or something absolutely absurd like that. Instead, let's value the turnkey plan and take massive action. And here's what we need to do. First, set your goal on what you plan to achieve. What is the reason that you're investing in the first place? Are you wanting to build wealth for retirement? Do you want to retire early, have financial independence, all of the above? Take out a pen and paper and write it down. Number 2, choose the amount that you're going to invest daily or weekly. It doesn't have to be $5 a day like I do it. It's whatever you think is right and whatever fits in your budget today. Start with it, start as soon as you can. And then number 3, select a diversified portfolio. Now, even if you're not sure, look at it like an entire index fund like VTI. That tracks the entire US stock market. Or something like VOO. That tracks the S&P 500. Fourth, automate your investments if possible. Now, all I do is I transfer about $200 to $300 in cash from my checking account each month. And then I tell the app to do an automatic investment of $5 a day. So what it's doing is it takes that cash out of the money that I transferred in, and that is what it's using to invest every single day. At the end of the month, I transfer more in. But there is something that we are missing here, and all of this is what I just said, and that is the rule of 72. See, what that does, that rule gives us an actual mathematical calculation on how long it takes an investment to double in size. So what we need to do, divide the number 72 by the annual growth rate of your investment. So first thing you want to do, whatever investment you're looking into that you're excited about, look into the last at least 10 years. And what you want to do is take the average growth rate over those 10 years. What's the annual growth rate for the last 10 years? So if we take, for example, the S&P 500, ticker symbol VOO, that averages right around 10%. So what we're going to do is we'll take 72, divide it by 10. It would take right around 7.2 years to double in size. Let's say, as an example, you have $100,000 in your portfolio. In 7 years, without any more contributions, you could expect that to double to $200,000 given no weird or odd circumstances. So once you start realizing the power of compound interest, here's what you need to consider. Even though we started with a very small investment, as you continue to make more money, as you pay down debt and have more money at the end of the month, and you start realizing the power of investing, now it's really time to take that small investment and make it even more. Because the more you put in, the faster you get to that goal. Maybe it's now $10 a day, maybe it's $30 a day, or even more than that. And see, this is especially important going back to if you are 20, 30, 40, 50 years old or older right now and you're watching this video, while you don't have as much time on your side as somebody who's 18 and can scale that up with $5 a day, what the most important thing to do here is start right now. That's each day that you wait, you're losing valuable time that your investment can grow. As someone who might be in their 30s, it's important to find opportunities to get more money left over at the end of each month. So that could be paying down debt, finding ways to make more money. So that $5 a day, or maybe it's $150 a month, you can grow that and grow that and grow that. So even if you need to start with only $5 a day and you're 35 years old, that's cool. Find a quick way to pay down debt so you have more money left over at the end of the month to invest more. Remember that rule of 72. The most important thing though today is to remember that you are worth this and you got this. See the latest update on my $5 a day small investment challenge by checking out this video next, and we'll see you on the next video.